On the world of business now, crude oil prices breached $90 per barrel at the end of last week.
Elevated crude oil prices could impact economies across the globe, stock market returns, and more importantly, you, the consumer. This next report explores what rising crude oil prices mean in the global context. Take a look.
Crude oil prices topped $90 per barrel at the end of the last week, and supply disruptions due to production cuts and geopolitical tensions could take prices as high as $100 per barrel. That could have significant implications on the global economy. Firstly, elevated crude oil prices tend to fuel inflationary pressures across economies. As oil is a fundamental input in various sectors such as transportation, manufacturing and energy production, higher oil prices translate into increased costs for businesses. This often leads to higher prices for consumer goods and services, pushing up overall inflation. Central banks may respond to this by delaying their rate cut timing, potentially impacting economic growth. From an investor's perspective, rising oil prices can impact stock market returns in several ways. Energy stocks typically benefit from higher oil prices as their revenues and profitability increase. Conversely, sectors like airlines, transportation and consumer goods may experience margin pressures due to increased operational costs. Therefore, market indices may exhibit volatility, with investors adjusting their portfolios based on sectoral performances and changing oil dynamics. For consumers, higher crude oil prices directly translate into increased prices at the pump. This means higher costs for commuting, transportation of goods and travel expenses. Moreover, businesses often pass on increased production costs to consumers, leading to higher prices for everyday products. As a result, household budgets may come under strain, with discretionary spending potentially being curtailed. Looking ahead, the trajectory of oil prices will depend on multiple factors, including global supply dynamics, geopolitical tensions, and demand outlook. The possibility of crude oil prices nearing the $100 per barrel mark introduces additional uncertainty, potentially intensifying inflationary pressures and market volatility. Bureau Report, WION World is One.